Bond markets are an essential part of the global financial system, providing a means for governments and corporations to raise capital. So in this video, we are going to discuss the top bond markets in the world, their size, and their significance in the global economy. Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. What are bond markets? Before we dive into the largest bond markets in the world, let's first understand what bond markets are. A bond is a debt security that represents a loan made by an investor to a borrower. The borrower can be a government or a corporation, and the bond represents a promise to repay the loan with interest over a specified period. Bond markets are where these bonds are bought and sold, and they are an essential part of the global financial system. The largest bond markets in the world. Valued at over $51 trillion, the U.S. has the largest bond market globally. Government bonds made up the majority of its debt market, with over $26 trillion in securities outstanding. In 2022, the federal government paid $534 billion in interest on this debt. China is second, at 16% of the global total. Local commercial banks hold the greatest share of its outstanding bonds, while foreign ownership remains fairly low. Foreign interest in China's bonds slowed in 2022 amid geopolitical tensions in Ukraine and lower yields. A major buyer in bond markets. Like central banks around the world, commercial banks are key players in bond markets. In fact, commercial banks are among the top 3 buyers of U.S. government debt. This is because commercial banks will reinvest client deposits into interest-bearing securities. These often include U.S. Treasuries, which are highly liquid and one of the safest assets globally. As we can see in the chart below, the banking sector often surpasses an economy's total GDP. As interest rates have risen sharply since 2022, the price of bonds has been pushed down, given their inverse relationship. This has raised questions about what type of bonds banks hold. In the U.S., commercial banks hold $4.2 trillion in treasury bonds and other government securities. For large U.S. banks, these holdings account for almost 24% of assets on average. They make up an average 15% of assets for small banks in 2023. Since mid-2022, small banks have reduced their bond holdings due to interest rate increases. As higher rates reverberate across the banking system and wider economy, it may expose further strains on global bond markets, which have expanded rapidly in an era of dovish monetary policy and ultra-low interest rates. What is the total value of the global bond market? The global bond market stood at $133 trillion in value in 2022. This represents a significant increase from the $30 trillion outstanding value of international bonds in 2011, as reported by. The bond market has been growing steadily over the years, with debt securities growing sevenfold over the last 40 years. As 3 reports, the global bond market is roughly $100 trillion globally, making it roughly 3 times the size of the EU and United States GDP combined. Despite the recent surge in bond sales, as reported by, the total value of the global bond market remains at $133 trillion as of 2022. The global bond market has experienced significant changes in value over the years. As reports, the amounts outstanding on the global bond market increased by 2% in the 12 months to March 2012 to nearly $100 trillion. Domestic bonds accounted for 70% of the total, and international bonds accounted for the remainder. The bond market increased to over 140% of global GDP in 2011 from 119% in 2008 and 80% a decade earlier. The considerable growth means that in March 2012, it was much larger than the global equity market, which had a market capitalization of around $53 trillion. However, as reports, the bond market experienced a sharp decline in value in 2022 due to the rise in interest rates that accelerated throughout fixed income markets. Despite this, the global bond market stood at $133 trillion in value in 2022. The bond market has been affected by the economic slowdown in various ways. As reports, during a recession, the biggest declines in bond market activity tend to occur at the end of the recession. However, as reports, the bond market may be overplaying the risk of a deep recession, and trading in other major markets suggests that a painful economic downturn is not as set in stone as Treasury investors think. On the other hand, as three reports, the bond market has experienced a sharp decline in value due to the rise in interest rates that accelerated throughout fixed income markets in 2022 as inflation took off. The bond market has also been affected by central bank interest rate hikes, as four reports, with the bond market now pricing in a steeper path for monetary tightening by central banks around the world, raising the danger of recessions. Despite these challenges, the bond market remains a critical component of the global financial system, and its liquidity and size make it attractive to investors worldwide. Key relationship between the bond market and economic slowdown is that an economic slowdown could alter the general upward trend of interest rates. Persistently elevated inflation altered the landscape for bond investors in 2022, and factors that affected the bond market included specific Fed actions, often anticipating upcoming monetary policy moves. According to the global bond market stands at $133 trillion in value. Here are the major players in bond markets worldwide. United States. The United States has the largest bond market in the world, with a total value of $47 trillion. The U.S. Treasury market is the most significant component of the U.S. bond market, and it is the largest and most liquid government bond market in the world. The U.S. bond market is also home to a vast corporate bond market, with companies such as Apple, Microsoft, and ExxonMobil issuing bonds to raise capital. Japan. Japan has the second largest bond market in the world, with a total value of $13 trillion. The Japanese government bond market is the largest component of the Japanese bond market, and it is the second largest government bond market in the world after the U.S. The Japanese bond market is also home to a large corporate bond market, with companies such as Toyota, Mitsubishi, and Honda issuing bonds to raise capital. China. China has the third largest bond market in the world, with a total value of $12 trillion. The Chinese bond market is dominated by the government bond market, which is the third largest government bond market in the world after the US and Japan. The Chinese bond market is also home to a growing corporate bond market, with companies such as Alibaba, Tencent, and China Mobile issuing bonds to raise capital. France. France has the fourth largest bond market in the world, with a total value of $3.5 trillion. The French bond market is dominated by the government bond market, which is the largest component of the French bond market. The French bond market is also home to a significant corporate bond market, with companies such as Total, Sanofi, and BNP Paribas issuing bonds to raise capital. Germany. Germany has the fifth largest bond market in the world, with a total value of $3.4 trillion. The German bond market is dominated by the government bond market, which is the largest component of the German bond market. The German bond market is also home to a significant corporate bond market, with companies such as Volkswagen, Siemens, and Deutsche Bank issuing bonds to raise capital. The global bond market is a crucial part of the global financial system, providing a means for governments and corporations to raise capital. According to the global bond market stands at $133 trillion in value and has grown sevenfold over the last 40 years. The largest bond markets in the world are the United States, China, Japan, France, and the United Kingdom. These markets are significant players in the global economy, and their size and liquidity make them attractive to investors worldwide. However, as reports, the bond market is now pricing in a steeper path for monetary tightening by central banks around the world, raising the danger of recessions. Despite this, the bond market remains a critical component of the global financial system. The bond market's most inverted gauge is pointing to a large slowdown in economic growth and a deep recession. Rising bond prices work against existing bond holders because of the inverse relationship between bond yields and bond prices. When yields rise, prices of current bond issues fall. This is a function of supply and demand. When demand for bonds declines, issuers of new bonds must offer higher yields to attract buyers. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.